Hello, everybody. Today is May the 19th, 2025. I am John Blank. I do have a PhD from MIT in economics, and I am Zacks Chief Equity Judge and Economist. So today we are going to go through Zacks Tariff Talk Part 3. We've done this for last month. Of course, this is the big news in the United States and around the world. So I hope you learn something from this. Today, we're going to have three parts of actual companies who are importing and exporting from just the United States. So, of course, this is the U.S. specific talk. It's also going to be just mainly large cap stocks in the United States that are our top importers of goods and top exporters of goods. So I will not also talk about services, intellectual property, and other things we've talked about. I will just talk about the share price fundamentals of these big companies, 8 or 10 on each side. So part one will be the fundamental charts. Part two will be the price, share, and EPS charts, which will actually show you where they're set up as we enter this turbulent period with tariffing. Final one, we'll get into the major maritime routes, supply chain management issues, and this global reserve currency issue called the Triffin dilemma, where you can't win when you are the global reserve currency, of which, of course, the United States is the global reserve currency. So this will be a very interesting closure for our discussion. So number one, I want people to understand that this is what we're going to do. And to get there, I just want to start off with my disclosures, which, of course, these are the views of myself. I do have a PhD, and they are not necessarily the views of Zacks Investment Research. Read the rest of this at your leisure. Okay, so first thing we want to get into is the major miscellaneous companies by imports. If you look at the table here, we're going to get this whole story of top 10 goods product imports in 2024. So when we imported, so a lot of the number one thing you'll see translates into the companies: electrical machinery and equipment, electrical equipment, electronics, 15%. The next one, nuclear reactors and boilers, is a very high number. It'll be much harder to place in a company-specific context. Goods that are vehicles, of course, this is transportation and autos. That's a big one, 12%. Mineral fuels, oils, and distillation, yes, they do actually get imported to the United States as well as exported. Pharma products, heard a lot about that from this president. Optical, photo, technical, and medical apparatus, pearls, precious stones, plastics, and down there at the bottom, something that actually does end up being a fairly big thing: furniture, lighting, signs, and prefab buildings. So furniture in general is actually being picked up. So over here, we've got our top importers. And you can see, again, what we've got here is a story of Walmart with 50 billion being really the top issue for importing. We know just recently about their worries about raising prices. So when Walmart talks about raising prices on tariffing, they are the number one importer. Keep that in mind. Target is number two. Home Depot, number three. Lowe's, number four. Amazon, number five. All retailers. Going to get to the sixth level. Samsung, which is a South Korean electronics maker that is shipping in its smartphones and televisions. Nike is an importer. Its shoes are big. Ashley Furniture, of course, tied to number 10. They are the ones that are bringing in furniture. Costco, of course, just like Walmart, Target, and Home Depot, Lowe's, big importer of goods. Dell Technologies down there at the bottom is tying you up to the number one level, which is electrical machinery and equipment. Dell does a lot of laptops, desktop servers, and storage items. So down here, we've got all kinds of different groups. This is the U.S. at the top percentages from anywhere from 35 to 95%. Of course, 95% is Home Depot. And down here will be Home Depot, showing the other 5%. And then we've got Costco and Home Depot really, not really being exposed to this story as much as other places. Down here at the bottom, Dell and Nike are really exposed. Their imports, can be 55% Dell and Nike. So keep in mind that, the real story here of importing is going to be these retail big box companies that are reporting next week, or this week, I should say. Last week we had Walmart. The rest will come out this week. Amazon, we've already heard from. Um, and it's not looking good. Keep in mind also down here, this is Amazon, non-US and US. And you can just see the incredible growth 2017 to 2020 for Amazon. They are a much bigger story of importing and US and non-US than they used to be 10 years ago. Keep in mind, Amazon really is a global company. All right, these are our exports. What are we exports? Of course, mineral fuels are going to be number one. Of course, over here we got Exxon Mobil. That's going to tie out very well, 15%. Machinery, including computers, that's going to be Apple, of course. Cisco Systems is awful in there. Qualcomm does a ton of exporting. Boeing is going to be up in other areas. There's aircraft and spacecraft number 5, 6.5%. That'll be Boeing. Vehicles, of course, that's a big one. And we're going to see that play out as something. We actually do export vehicles, 7%. That will be General Motors. Plastics, pharmaceuticals, gems, of course, organic chemicals. All these are the goods. So the biggest exporter in the United States is Apple Computer, and its export value is $250 billion. So the export values are really stacked up here in some of these major companies. Exxon Mobil, $200 billion. Microsoft, $120 billion. Cisco Systems, $53 billion. Pfizer, $50 billion. Johnson & Johnson, $39 billion. Boeing, $31 billion. Qualcomm, almost equal to Boeing at $29 billion. Probably didn't know that. General Electric, $21 billion. And Intel, $17 billion. So again, down here we can look at who has super low U.S. production. It'll be Intel and Qualcomm. They are the big non-U.S. revenue producers. Those two companies are really in the situation of exposure to exports. That means this is more of a retaliation story. These are the tables. Again, this is the ones that are paying tariffs on imports will be these ones. Walmart, Target, Home Depot, Lowe's, Amazon. And this will be those who are facing retaliation. Apple, ExxonMobil, Microsoft, Cisco, Pfizer, and so on. Keep in mind, we've got two stories here, the imports and the exports. And they're playing out in different ways in this environment. Okay, so let's get into these companies. You can reference back to those original miscellaneous tables, number 1 and number 2, and get into the metrics of these companies. So free cash flow and depreciation and amortization. Let's skip depreciation and amortization, but let's focus on free cash flow. On the left is our importers. Top importers, of course, will be GM. On the right is our top exporters, and of course, Apple is over here, and Microsoft is next, and Exxon Mobil, like we said. So you can see generally, Apple particularly has really exported a lot, as is Microsoft since the COVID pandemic. So they're very exposed. General Motors is very exposed to cash flow from importing. Home Depot is, Walmart is, Costco, Nike, and Dell. Those are your list of companies. Again, I just think it's interesting to look at, where we are in the pandemic era versus the prior era. And you can see generally speaking, post-pandemic era has been very rich for the free cash flow for these companies. Very volatile for the importers, not so volatile for the exporters. So importers do see a lot more volatility. Keep that in mind as well. Reinvestment rate is at the top, because here's our importers again on the left, and those are exporter over here. And we've got reinvestment rate and total debt to capital. So people who have had a lot of debt who are importing, Dell and HD, General Motors, are your three main concerns here. Over here, it's of course Boeing. Although they've dropped their debt dramatically, they've done some restructuring. Apple and GE come in next, but Boeing is the clear differentiator. And over here, from a reinvestment rate perspective, it's Apple Computer for sure. All right, net margins. One thing I thought was fascinating here is the buildup of net margins at Amazon. Just phenomenal story there. And then down here, price to free cash flow, just in terms of share price run up. These big importers, Costco and Walmart, have just been driven up last 2 years. So those shares are very susceptible to a sell-off. If you own Costco or Walmart, take a look at it from this perspective. From a retaliation perspective, Microsoft, GE, and Apple, of course, are your big concerns. Microsoft would be your number one concern. It's getting a lot of story as being not hit by the tariffs, but we should understand Microsoft has a big exposure to retaliation. Cash flow yield. Again, top importers will be General Motors to be most concerned with, Dell and Amazon next. Top exporters, of course, we're going to get Exxon Mobil, Johnson & Johnson. Cash flow yield perspective, Apple's not as bad off as the situation. From a revenue perspective, it's really interesting to just look at all these companies' revenues. See how big they are. Amazon, that's $718 billion. Just astonishing how big Amazon and Walmart are. They're several times larger than Costco, and say 5 or 6 times larger than Home Depot, and 7 or 8 times larger than Dell. Just amazing. Apple, huge company. Exxon Mobil has stayed up there pretty close to them actually in the past post-pandemic era. They're kind of hand in hand. And you can see that really steady performance here of Microsoft over the last 12 years. This has been a company that has really come to represent a true mega cap. And you can see that here. Nice performance by Microsoft on revenues. All right, now let's get into the price EPS consensus and EPS surprise charts for these companies. Number one, I want to talk about the importers. Again, we've been talking about these names consistently. Walmart leads the way. You just look at the incredible run up in share prices, and then the big slam down and pickup. Really kind of a topping process to the Walmart chart. Home Depot has already come down dramatically, much more than Walmart. Walmart is holding up on a secular story with their delivery businesses. Amazon got hammered, not quite as bad as Home Depot. Costco is holding up. Brilliant chart with Costco, really hard to see anything going. Poor for that company. Home Depot, of course, much more downsizing its revisions over time. Amazon's really turned it around the last 2-3 years, as we saw from that profit. They've really done a great job focusing on the business. Down here, we got GM, Nike, and Dell. Nike, of course, the dog here. GM, unspoken performer, but look at these estimate revisions that have come down recently because of their exposure to this tariffing situation. You can see the dramatic decline here in that area, and Dell, of course, also seeing some of it, not as much as GM. But Nike, you got problems with the business. It's just not holding up very well. Okay, here's our exporting companies. Microsoft, like I said, is really leading the way. There has been sell-off, but a pickup, a recovery. Boeing, we're seeing a buildup in this business of late, but it's really a sideways company, not very interesting. General Electric has been a strong stock. Intel, of course, we all know the story in the video. That's just killing Intel. Apple, God, it looks like it really has been major profit taking than people coming off the estimate revisions. Kind of a bear story with Apple. Exxon Mobil, really not an attractive chart. It should have, the shares are going sideways, but the estimate revisions are going down. And Cisco here, you've got a really bullish share price, but estimate revisions are not as strong as you might expect them to be. Right, here is the 16 top sectors. We get, forward 12 months. This is 2025, 2026, and then the 2-year out. So let's not carry much 2 years out. Let's just look at the 1 year out. I just want to talk about, levels of PEs are sometimes, the real issue here with the slowdowns. The problem we have is Strategist it's tariffing. You can take the slowdown down, but look at these price earnings ratios when we're forward look. Some of these are extraordinarily high. Auto at 28. Retail, of course, is your Walmart, Costco, Home Depot, 25. Consumer discretionary, 21. Industrials 21, aerospace 30, tech 27, business services 24. So if you want to look at areas that could really be hammered on a valuation pullback, those are the areas. And yes, that has been what's happened here already. Tech and consumer discretionary, right? Consumer discretionary is there. Tech is there. This has already happened. I'm not talking about what will happen. I'm talking about what has happened. But you do need to realize that one of the issues here is very high PE stocks in sectors that are very high PE. Those are other areas of concern. All right, final section here, major maritime routes, supply chain management, and what's called the Triffin dilemma. All right, first of all, the major supply chain routes, of course, you got the Panama Canal, which is 50% of this is Asia and the East Coast. So Panama Canal is really now not between the West Coast and the East Coast of the United States, it's between the Atlantic and the coast areas and Asia. Trans-Pacific routes are a little different. That's Shanghai, Hong Kong, and Tokyo to Los Angeles, Long Beach, and Vancouver. Shipping durations from Japan is 14, from Hong Kong and Singapore are 18 to 25. It does make differences when you go from transatlantic. East Coast of Europe is 7 to 14, so it's a lot shorter. And where they end up is between New York, Savannah, and Charleston, and the European ports, Rotterdam, Hamburg, and Southampton in Europe. So shipping durations are 7 to 14 days here. An additional week, basically, to go from the ports from China to West Coast, and transatlantic ports about a week shorter than that. So we got all these information over here for you to go ahead and take a look at. But this is basically, you just want to make sure you understand. We got, in a global world, we got trans-Pacific routes, transatlantic routes, Panama Canal routes, and North American coastal trade routes, all bringing together the major maritime supply chain. So this is, the complexity behind all of these stories. And the other thing that is interesting, of course, is the supply chain management. We've heard a lot about, Jerome Powell and other groups concerned about endless supply chain shortages and shocking of the system. So planning and forecasting, sourcing, procurement, production, manufacturing, inventory management, logistics, customer service, risk management, technology, and data. You can read through all of this. Again, this is our sources for it. But the basic point is there's just an amazing amount of business complexity in managing supply chains. It is not a simple process to manage this process. I think this is the major drawback to the tariffing, is that supply chain management, when you just step back and look at this, see what's involved here, the 8 or 9 steps that are involved in the multiple sub-bullet points, 5 or 6 bullet points. You're adding up 50 different issues with supply chain management, all of which you are distorting and disrupting. And this is something that is really hard to address in short-term timeframes. It's a long-term thing only. And this tariffing has been very short-term. This is really a major issue, the supply chain management. So I want to finish up here with economist Robert Triffin's theory of what happens when a nation's currency also serves as a global reserve currency. Of course, this is the U.S. dilemma. Why is it a dilemma? So global demand for international transactions, when you are the global reserve currency, you would like to get actual run deficits so you can supply that currency to the world, which is the situation the United States is doing. We don't talk enough about the benefit of our deficits, but one of the benefits is we supply dollars to the world and we are the global reserve currency. That is actually, a benefit for us. As long as we are the global reserve currency, our trade deficits can be seen in a beneficial way. Keep that in mind. So where else is the global reserve currency? We're seeing people buy gold, we're seeing people buy Bitcoin, but at the end of the day, it's still the dollar. Now, the dilemma is that what's better for you as a country is to maintain competence. You would typically like to run trade surpluses. So that would show stability and value in your currency. So we're not doing that. And that's the Triffin dilemma. As the global reserve currency, you would like to run deficits, but as a country, you would like to create surpluses. That's the Trumpian thinking. We like surpluses, not deficits. And we have deficits. So again, the dilemma is you can't solve this problem when you're the global reserve currency, because you are serving two roles: your national currency role when you would like to run surpluses, and the global reserve currency role when you're running deficits, and that's better for the world to get a hold of your currency by capital account transactions that hand dollars off. So I hope you enjoyed this discussion of our biggest importers and exporters and the international financial system, supply chain management, and the setups of these stocks. So I enjoyed it. We had three parts. Please look at the other two parts if you haven't looked at this one. And you need to look at their other ones. But this one really is interesting just because we're talking large cap stocks, major companies, because they are really the most global and most involved in this situation. If you want these slides, give us a call at 866-794-6065. Or send us an email at strategycall@zackspro.com, or find us on the web at www.zackspro.com. We've also got a LinkedIn page at Zacks Professional Services, and you can find us on Twitter at ZA Tools. But for the detail here, this is really why we do these talks, is to set you up to get these slides, because the slides are really where you can learn something when you're looking into stocks you own or stocks you might want to buy and see what the setups are like. Only other place we do this is right here. So go ahead and give us a call, 866-794-6065, or send us an email. Thank you much. I hope you enjoyed it.